All right, let's dive in. Today, we're going to unpack two really important trade pacts that are, completely reshaping India's economic game plan with its eastern neighbors. You've probably been hearing about SECA and ITIGA a lot lately, and we're going to figure out exactly why they matter so much right now. So, what's kicking all of this off? Well, here's the core question. When one of your biggest trading partners, the United States, starts putting up new tariffs, what do? Where do you turn? For India, the answer is pretty clear. It's time for a major economic pivot to the east. And here's our roadmap for today. We're going to start with the challenge that got this ball rolling. Then we'll look at two key agreements, a really deep partnership with Singapore called CECA, and the bigger regional deal with ASEAN, known as AITGA. After that, we have to talk about a pretty serious trade deficit problem. And finally, we'll connect all the dots and see why this whole pivot is such a big deal.
Okay, let's get into it. First up, the new trade challenge that's really the catalyst for this entire strategic shift.
This isn't just some abstract policy tweak. The threat of losing money from trade with the U.S. has created a real sense of urgency. It's pushed India to hit the accelerator on its Act East policy, which is why we're seeing all these high-level meetings aimed at making economic ties closer to home a lot stronger. So what's India's first move in this new game? It's leaning on a really strong, time-tested relationship with Singapore. And that whole relationship is basically built on one landmark agreement. That agreement is called CECA. It stands for Comprehensive Economic Cooperation Agreement. And you really got to pay attention to that first word, comprehensive, because that's the key here. This is not your standard trade deal. It's a much deeper, more layered partnership. And this isn't some new thing either. We're talking about a partnership with some serious history. 60 years of diplomatic relations between the two countries, and CK itself has been the solid economic foundation for the last 20 years. This is a mature, battle-tested alliance. So what makes it so different? Think of it like this. A normal free trade pact, it's like it opens one door, mostly just for physical goods to pass through. But CECA throws open a whole bunch of doors all at once. There's a door for services, one for investments, another for intellectual property. It's the whole shebang. So what does that actually mean for people? Well, it means the rules inside CECA make it way simpler for, say, an Indian software developer or a financial analyst to go and work in Singapore. And on the flip side, it paves a much smoother road for a Singaporean company to come and invest directly in India's market. Okay, so that's the deep, one-on-one partnership with Singapore. Now, let's zoom out to the bigger picture. We're talking about the entire 10-nation ASEAN bloc, and the main trade deal India has with them, a deal that, it's starting to show its age. And that pact is called AITGA, the ASEAN-India Trade and Goods Agreement. This was signed way back in 2009, and for a long time, it's been the main rulebook for trade between India and all 10 of those ASEAN countries. Now, it was a huge deal when it happened. It cut tariffs on thousands of products. But that was 15 years ago. In the world of global trade, that's practically an eternity. It's kind of like trying to run your life with a smartphone from 2009. Yeah, it can make calls, but it's missing all the crucial features you need today. That's why IT goes under review. It needs an upgrade, badly. So what does an upgrade actually look like? Well, the talks are really focused on making the whole system faster by simplifying customs, making it fairer with better access and clearer rules, and making it safer by modernizing all the health and technical standards. It's basically a full system overhaul. Let's take one of those super technical terms, SPS measures. Sounds complicated, right? But it's actually pretty straightforward. It's all about food safety and plant health. If they modernize these rules, it means an Indian farmer exporting rice can be confident their product meets the standards in all 10 different ASEAN countries, not just one or two. It just makes everything flow so much better. Okay, and now we get to the real heart of the issue. The reason why this AITIJA review isn't just a good idea, it's an absolute necessity. And the whole reason? Well, it's all in the numbers. Just take a look at this chart. It tells you everything you need to know. So far this fiscal year, India has sold about $39 billion worth of stuff to ASEAN countries. But in that same time, it has bought over $84 billion worth of stuff from them. And when you do the math on that, wow, you get this number right here. That's a trade deficit of over $45 billion. India is buying way more than it's selling, and that gap is only getting bigger. And that number, that massive imbalance, is the number one reason India is pushing so hard to renegotiate ATGA. The whole point of the review is to level the playing field, to modernize the rules so Indian companies have a fair shot at competing in those markets and can start to close that gap.
All right, let's pull back for the big picture. Because this whole eastward pivot, all these intense negotiations, this is about so much more than just trade statistics. This is about India's strategic place in the world for decades to come. Here's why it's so critical. Economically, ASEAN is already India's fourth largest trading partner. It's huge. Geopolitically, a strong relationship there is the absolute cornerstone of the Act East policy. From a resilience standpoint, it means India isn't so heavily reliant on the US and Europe. And for manufacturing, it plugs India right into those vital global supply chains that snake through Southeast Asia, which is absolutely crucial for things like the Make in India initiative. So when you put all of those pieces together, the goal becomes crystal clear. This is a massive effort to update old rules and knock down trade barriers, all with one ultimate goal: to strategically make India's economic and geopolitical position in Asia much, much stronger. So the next time you hear someone talking about SICA or AITGA, just remember this. They are not just boring acronyms. They are the actual tools being used to build India's economic future. The real question now is, can updating these agreements turn a story of trade deficits into one of balanced strategic growth? That is the multi-billion-dollar question everyone's waiting to see answered.